And that's my sense of morality, right? Whether or not you put in Christianity or not, my sense of morality is very, very honest. I refuse to the best of my ability to be part of the problem, which is limiting. I'm not going to fib. It is limiting because there's a lot of darn problems in the world. And I do my best to leave people better than I find them. And that's it. To leave things, people, places better than I find them. And if you live by those two things, I think it's just a good path to life. And success will fall where it falls. And sometimes it may be a bigger target, a smaller target. We're targeting, 100 million under management. And the people that I work with outside of this group, I hear them echoing in my brain, even when I don't feel it myself. And they keep saying something. It goes like this, ready? No one compete where they don't compare. Because a lot of things that are out there, even with the vast world of YouTube, does not compare to some of the things that not only I've accomplished and or we're doing, but there just aren't words for how true that is. It's literally, the internet can't compete where it doesn't compare, because it does not compare at all.
No, it doesn't. And I tell my sons this all the time. And you can't take everybody to the dance, because everybody isn't prepared to dance, and they don't know the right steps to take. And what you're doing, you're training people, but everybody's not going to be able to go on this journey to the depths that you would love to see them go, because it's a psychological endeavor that we have to go through. And money is very psychological, whether you want to realize it or not. Anytime you spend the money, it's a psychological thing. You got to think. I mean, you think about it. Is it, do I want it or do I need it?
Well, there's always a price to be paid for wealth.
Yes.
And the market doesn't just hand out 5-to-1 trades.
Oh my gosh, that.
Oh, you're lucky to get a 1-to-1.
So don't think that, okay, I'm going to trade 5-to-1s and the world is my oyster, because you're going to get your butt handed to you.
Yes. 100%.
You've got a statistical, so you have a kind of a 1 in 6 chance, basically, of winning. So 1 divided by 6, that's about 16 or 17% is your break-even point on a 5-to-1. So that means that you need to do better than 16% to have an edge.
And you and I have talked about this. There's another part that goes into that equation, because you have to win 20% of your trades to be, whatever, profitable, break even. But the farther away your take profit is from your stop loss, that probability of hitting your stop loss versus your take profit increases the stop loss being hit extremely, right? It increases it so much, because now your stop loss is here and your take profit is here. The odds of hitting here is a whole bunch higher.
Yeah, because that's just the built-in nature of it. Is that if you want to have a high win rate, reduce your target.
But I've proven I've gotten good at that, but now I'm trying to get good at this.
What about if you sort of manage it a little bit differently once you're actually are in a trade? So let's say, for example, if you're going for a 5-to-1 and that's your normal catalyst, and let's say you are at a 2-to-1 profit, 2-to-1 RR, right? Then you put your stop loss into break even, and then you just hold until you're 5-to-1 or it hits your break even, and at that point in time your trade is a void until you have your next signal.
I've got
do it that way.
I've got something to say to that. So as you guys know, I've been a very big advocate of scale outs, okay, locks and break evens, and I still am. Okay, so please don't let this conversation deter every single thing else that we've talked about. I still am in its place, but for futures, what I'm working on is not scaling out, okay, as often, not locking, and not putting my stuff at break even. Because remember, we need here, the further away you go, so you're getting 5-to-1, let's 7-to-1, 3-to-1, okay? Wow, please forgive my writing here. 10-to-1. You need these 10-to-1s to hit. So the problem with that is, on the one that would have been the 10-to-1 out of 10, right? Remember, you get 1 out of 10 on a 10-to-1, you're profitable. I mean, you're literally profit, not just break even, you're profitable. The problem is, if that one comes back to break even, or you get locked out, stopped out, or you scaled out of 50%, now you need 3 times those amount of trades, and or, you know what I'm saying? It hurts So these are hurting if this is the target. These are hurting me. So this is perfect for my Forex. This is perfect for my brokerages that are not my futures. And I still think that these have a place. But I would probably stick closer to trying to average because I'm already averaging a 2 to 3 to 1. And that's with all my scale outs and non-sensory. So the trades that I'm mostly calling, the very small percentage of them are the ones that just tap, take profit 1. The rest of them we're catching the big swings most of the time, like a big enough swing. Now it's about tightening my stop loss and being willing to take some of these losses, because if I do this over and over and over again, it's crazy to see, but if I'm locking that trade, so if I take this and it's a loss, I take this and it's a loss, cool, but I take this and it's a win, that's a big win. But if I take this and it's a loss, and I take this and it's a half, I'm going to call it a halfway point, okay? So I only knocked out of this, it might not be enough to make up for all the losses that happened to date. And now I'm still a net break even and or losing trader. And I think
as soon
that's
as you start moving your stop loss, you're now affecting your win rate.
yes. Any adaptation you make to your active trade is affecting this.
And if you consider, market trading is a series of moves up and down in different frequencies. So this could be just sort of a normal hash of the market. And then you've got another signal that is longer. And so you superimpose that. This is actually going like this. And so if you make your decisions at some point, all of that hash that's sitting in there is going to be affecting. And this is all just sort of figuring out this as a random market. We look for edges by trying to figure out what might be causing some of these moves and predicting to some degree. And sometimes our predictions are only a slight edge, and in a large set of trades, you get a little bit of edge. But this is not a panacea.
A what?
A panacea, it's a cure-all.
Okay.
It's not going to make life wonderful.
It's hard because the tighter I try to make my stop loss, I am refraining myself from moving my stop loss because I'm getting knocked out. So that's what happened yesterday evening on gold. I was selling and selling and selling. But when I went to break even, I ended up with a net barely positive trade. Whereas if I just had let it hit my 3 to 1, my 5 to 1 target, and I had this really tight stop loss, I would have hit it, right? So then I said, okay, cool. And before I went to bed, I had one account where I thought was pretty close to the same stop loss, but not exactly the same price point, evidently. This hit that low that I was targeting perfectly. I got my trade. It was close to a 10 to 1. And on the other one, it knocked me out because it was just slightly off. It was literally, it must have been a pick or two away, just a bit away. And this one knocked me out. But on a 10 to 1, that's still huge. This is a huge target. But it also meant taking losses along the way.
There's a guy that has a YouTube channel, Day Trading Micro E-mini Futures, I think, something like that. He does something really simple. He has a MACD, and he looks for the MACD to be moving down with separation between the line and the signal line, and he'll take a trade in that direction. Basically, he was looking for momentum. So when he starts to see price moving up, then he'll get in the trade with a fairly tight stop loss. And then what he'll do is, as soon as it gets up into profit, he just starts dragging a stop loss up. And if price makes a big move, he's moving his stop loss well up. And then if it comes back down and tags him out, that's fine. He made a little bit of money. He's just trailing really, really tight behind price. And he's making those decisions on the fly, everything manual.
With the MACD that makes the two
Order filled.
Right, it'd be like the pink lines down underneath, so you start to get a little bit of separation in there. And so that's kind of what he's looking for. He's using standard settings on the MACD. And that's just sort of what he does. Now, the problem is determining times, when you get big momentum swings, like if you look at the YM on the 1 minute chart.
Yeah, that brat. Sorry.
We just had these big excursions, lots of momentum. So You know, if he took a sell in here someplace, now let me just get rid of all my crap and start clean. So you see this big move down,
Order filled.
you know, even right in here,
Stop filled.
you can get in, you start dragging your stop down, and then eventually it's going to tag you out. It makes another move down with that green candle, and so you sort of do the same thing. It starts to move down, so you see the momentum, you get in, and then you start pushing your stop down as quickly as you can, and just take advantage of what you can get, you know? So it's sort of like he starts with a super tight stop, and so he's looking for momentum. And once he gets the momentum, he's in there moving with it. And often his trades are done in, 5 minutes or less. But when you start to get into hashy price action, something like this, it's going to get chopped up.
PMI was here. So this big move and this big move is not even including PMI. This is PMI.
Yeah, I don't think the PMI was big news.
I don't. Well, we came and we cleared the low. So, I mean, we got another wick right there.
So, that's an approach, but, there's no structure in that approach. There's a bunch of things missing, but, what it requires is that you sit there and you babysit and you try to take advantage of solid moves.